Socrates, one of his many points was know thyself, and I think this is a very pertinent thing in the investment space. You need to have a clear grasp of your own personality and what that means for your investment style. Do you have the patience to hold for a long time? Do you have the fortitude to witness your brokerage account being cut in half and still staying in there for the long game? Do you have more of a trader mentality? So the first question for these three guys, know thyself. What is your sort of broad investment strategy? Let's start with John.
Sure. So we've employed the same strategy from day one in 2016, which is what we call a hub and spoke strategy. So we use ETFs and mutual funds as the hub, and that would include things like GDX, GDXJ, and gold. On the silver side, we kind of tend to go with SILJ on the small stuff, and either SIL or SLVP on the larger cap. And we have about 25% of the portfolio in those ETFs. The spokes are various. It could be gold equities, silver equities, copper, critical minerals, energy. And where I have relationships with CEOs, we usually hold those stocks 1 to 4 years on average. But if I don't have a relationship, it's just going to be a trade, quite frankly. I mean, like, we see weird stuff happening in our sector all the time. I mean, Shad was just pointing out with Sean Thompson from BlackRock that a lot of these stocks are off 50% since March 2nd. Is that for any good reason? No, it's the war, I mean, in our opinion. And we think this is something that will be resolved this summer with the midterms coming up, right? So you have, as an investor right now, a tremendous opportunity to buy things cheap. And so does that mean we're going to hold those for 1 to 4 years? Probably not. Some of these things are just getting sold off, and we don't have a relationship. We can't get in touch with the company sometimes. We're not going to hold that long term. So that's our strategy.
Thank you. Shad?
I'm more of a position trader where I'll get into a stock for a few months or maybe a year or two. Now, I will stick with stocks years and have with many if they keep delivering and keep coming out with catalysts, but I'm usually looking at charts and technical analysis to figure out my entries and exits. I keep a larger portfolio than some people. I have about 60 stocks, and I'm a big fan of build your own ETF. I never can find any ETFs that actually have anything in them that I want or the right weighting, so I just would rather build my own. And so I have kind of a little mini silver ETF, a gold ETF, a copper, uranium, and a critical minerals, and even an oil and gas one now. And so I kind of look at managing the portfolio in that sense, like what would I want in my ETF, and so I jump in and out of stocks. But I'm not a just buy it once and sit there like a bump on a pickle. That's Erik's game.
Basically. No, I only do juniors. I think after absolute returns, and they tend to be the most undervalued. That's just how it is. I can't hold a large cap stock, even if I think it's 20-30% undervalued, when there's so many juniors that have, many reasons for being undervalued, and they don't have a million analysts following them. I'm always fully invested, no market timing. I bought every top the last 11 years. Thankfully, I bought every bottom the last 11 years as well. And I don't really focus on, let's say, 10 baggers. I just want to 10 bag my portfolio. So I would say most of my gains are coming from like easy layups, a double or a triple or something like that, not really the long shots.
Thank you. We are at an investment conference. Our audience has had the opportunity to meet with and sit down with a number of CEOs, a number of different companies, different sizes, producers, explorers, across a range of different commodities. For our panelists, what is your first screen on an investment, and how do you get to a position of high conviction to then deploy capital into a new opportunity? Erik, let's start with you and go back.
Well, it kind of depends on the case. The less I know of a particular deposit type or commodity, I'll go with people first. And also third-party validation, where you have a larger mining company. They know infinitely more than me. There's a million things that can go wrong with a mine or something like that. So that's just an easy screen. That's like, I can't be screwing up too bad making this bet if whatever Anglo Gold Ashanti just bought 9.9%, for example. So I mean, I have a theme. Me and Shad has talked about that before. We call it or I call it the foolproof portfolio. I think that's what I called it, where I just put together like 20 names in a portfolio, all had third-party validation, either major mining company or like the Lundins and stuff like that. And I just saw what it, how it would perform over a few years. I think last I checked, it was up like, I don't know, 260%, 300% over the last 3 years, and that's without any trading, no waiting either. So I mean, it's not proof of anything really, except that, hey, I had this thesis and it seems to be working out. But when it comes to conviction, I mean, I have high conviction on high risk plays, but since they're high risk, I weight them much lower than a low risk play, let's say. I love the place where you trust the management, they have some margin of safety, you see some probable upside on top of that, and if they have, let's say, exploration potential that might be high risk, but you're not paying for it, then that's risk-free risk in a sense. So even if they don't make a big discovery, you're probably gonna gain maybe 50 to 100% on the margin of safety, and maybe they have some probable exploration success on top of that. So it's like, I think in scenarios basically, and the lower the risk, the higher my portfolio weighting tends to be. But I really got to trust the people as well, and that's why it's much easier to, I mean, go with the people who've done it before and then add on, let's say, third-party validation.
Thank you. Shad?
I kind of approach it different than some people. I don't start with people first. My first filter is what commodity do I want to buy a stock in? So if I'm deficient in copper, or maybe I need a antimony stock or a tungsten stock, I start with the metal first, then I go to the stage of the company. I mostly like developers that have a PEA, a PFS out, maybe an FS, moving towards a pathway to production, or growth-oriented producers. So in any, like whether it's uranium or silver or gold, I want to have some producers. I want people pulling the metal out of the ground. If we're excited about the price, I want people that are making money off that price. So then when I filter down to that, then I look at projects. Where do I want to be? What jurisdiction? And I kind of look at people last. Of course, I'm not going to join a company that has bad management or doesn't have a good track record, but I don't just follow a gang around. I'm willing to jump in with teams I've never heard of before if the project makes sense, the metal makes sense, the stage of the company makes sense, and they have a good plan. So sometimes I'll take a swing on not the A team or the B team, but maybe the up-and-comers, like the new teams. And so that's kind of how I approach it.
Thank you, Shad. John?
Yeah, I'm slightly different. People to me is always my first screen because I get lied to all the time. So I want to be able to look people in the eye and have multiple conversations sometimes before I invest. Other times, like I just had dinner with Western Star Resources last night, and I met Blake at PDAC, and we both had dinner there the night before things kicked off March 1st. That was a much better environment. I just like connected with him, and we both said, hey, how the hell did 3 hours go by? Like we never do long dinners, each of us. So it was an immediate thing for me with that stock. That one is WSRIF and WSR in Canada. I think people are very stubborn as they get older. They get more stubborn, right? And they get less communicative sometimes in hot markets. And so I like to see how people change. And yeah, recently a stock was like, this guy kept blowing me off, and he blew off a couple of big clients of mine, so we just dumped the stock. I mean, like, I'm not gonna stick around if you're not gonna communicate with me just because you got, your stock's up 500% now and you forgot how you got there through influencers like the three of us. It's like, I put this panel together because I really think that people like Shad and Erik are like the new, regime. Like we've heard from people for years that are older, and they've put a lot of wisdom out there, but some of these people are just at the end of their game. Like, you need to be thinking differently about this rally that we're in and hear fresh ideas from people that are successful. All of our portfolios are kicking ass. Like, you want to replicate success, right? And so, like, when you put your numbers out there for the public to see, it's way different than just saying, oh, I did this or that, right? And we know a ton of these type of people that go on podcasts and have followings, real followings, but they haven't done anything relevant in years, in my opinion. So, sorry, that's how I feel. It's my conference.
Well, John, that leads into the sort of next question. There's a lot of noise in the space. So in addition to sort of meeting with companies, who do you listen to and why? You know, obviously you listen to the Feneck Commodities report, the Hedgeless Horseman, and Excelsior Prosperity and the Real Investment Newsletter. But what are your other sources of information that you use as part of your research process?
Yeah, so I had stockta.com here in the hallway all conference because I found that website in 2008. It looked like it was something from like 1990. It was a really ugly looking website, but they had some really good data that was free. They had support and resistance levels on any stock you want. They had RSI, relative strength index. I use these metrics in my analysis every day, you know, and I fact check myself. Usually when I'm selling, you know, because I get like to a point where the stock really ran up a lot, and then I have to fact check myself to see where the ceiling is as well as the RSI. If the RSI is over a certain number, I will sell a little bit, and then I'll sell a lot if it cracks 80 to the upside, because 80 RSI is pushing it in my opinion, and I think a lot of big money looks at that kind of stuff. But yeah, I use websites like that and Yahoo Finance and the general stuff. And I talk to people all the time. I think my strength is getting on the phone. I'm not afraid of the phone. I started my career as an analyst, and I was making 100 calls outbound a day, you know, and I've always maintained that kind of, you know, let me talk to the CEO and get an idea of what's happening. It's way better than looking at a website, in my opinion.
Thank you, John. Shad?
Well, another thing we do, and aside from the newsletter I write at Excelsior Prosperity, is I'm a co-host of the KE report. So we have the good fortune of interviewing a lot of newsletter writers and a lot of the companies directly, and fund managers that are putting positions in. And so a lot of times off mic, we'll just shoot the breeze and like, what are you in? What do you like? Why do you like it? And there's people that I've over the years started to respect and think they're pretty good at picking stocks. And so I will look at that as a starting point. And I also use technical analysis. So I think that for me, I screen a lot of things based on their technicals, and then I back into what is the fundamental picture, because the price action has all of the buying and selling, all of the sentiment reflected, all of the fundamentals of the company reflected. That's all baked into a chart. I know some people don't like charts, but it's a great way to filter through companies. And then if I have a question, like John says, I'll call the company. Like, I'll talk to the CEO. I want to know things specific, then I'll ask them. But a lot of times it's the network effect, like who's in your network. And I like to, a lot of the peers in the industry, I like to bounce ideas. I bounce ideas with both these gentlemen on the stage here. And even you and I bounce ideas, Paul. So there you go.
Absolutely. Erik?
Basically the same thing. I mean, I love new ideas. One thing, I don't typically bounce my investment ideas with too many people, because I don't really want too much influence from other areas. I mean, my idea is that don't fix what isn't broken, so whatever I'm doing, it's working. So I try to not get influenced too much by even let's say people I think are great investors. I'll hear their stocks or their pitches on these stocks, but then I really have to see it myself, what the case is and if it suits me. Otherwise I won't have conviction. I mean, I like to say that you're better off having high conviction in a good stock than low conviction in a great stock, because you're going to sell that great stock low because you don't have conviction. So I mean, the goal is to make money. I'm not trying to make the most money every year, because that's a gambler and they will have the worst years as well. And I don't really do much technical analysis except to have it confirm my bias already, just for fun.
Thank you. So although these gentlemen are expert, they do use other sources, do bounce ideas of other people, seek other people out to fill their knowledge gaps. Sorry, none of us are geologists, so I imagine that's a key area that people question on. In the junior resource investment space, a lot of people are talking about this 10-baggers, going, you know, basically looking to always hit it out the park, or just going for the opportunities to hit it out the park. Personally, I think that's a bit of a myth. Whilst these things do exist, I think if that's your sole focus, you can miss a lot of very good opportunities. Probably in any other sector, investors 100% gain is a fantastic result, which mining stocks, resource stocks can deliver much higher gains than that. To what extent or not is, you know, pursuing things like 10-baggers to hit it out the park. Is that distraction? Is that noise, Erik?
Well, I think so. I mean, it's one of those things where you're usually too greedy. I mean, I think it's much easier to 10-bag your portfolio over 5-10 years than it is to find a 10-bagger. I mean, you can get a 10-bagged portfolio just from owning likely doubles or triples or quadruplers and stuff like that, and it's not really a crowded space. I mean, look at the hot stocks. Look at some cases where there's a big hole about to come out that might break or make the case. I mean, everybody floods to these stocks because they can get rich overnight, and I think that just ends up killing your returns, and then you feel like you're even more behind, so you need to make up for it all of a sudden, so you take even more risk. I mean, it's like in poker when you go on tilt if you had a bad session. So I mean, I think there's plenty of cases out there where it's like, hey, I think this is probably going to go up 2 to 4x over the next 2-3 years or something. But that's usually not that interesting to a lot of people because, like, in this sector, a month is an eternity. So 2-3 years, but if you just back calculate that and then, have it on a rolling basis, I mean, your portfolio is going to do great. So I think that's the best way to invest in this sector, honestly.
Thank you. I think you're touching on a good point there, Erik, in terms of you need to understand what you're investing in and the timeline it will take to deliver on what it's promising to deliver. Some things can deliver in short term. They'll have a catalyst maybe of a PEA coming out in September just before Beaver Creek. Some stories have a longer gestation period to hit those valuation points. Shad, same question for you about sort of 10-baggers.
So I think this is one of those red herrings in the industry where everybody's running around chasing the 10-bagger because they mostly apply it to drill plays that are going to hit it out of the park. And the reality is only 1 in 3,000 drill targets ever becomes an economic mine. And so you got way better odds in Las Vegas. But with that being said, what I do is more of a valuation method. So I had 3 10-baggers last year, so it is possible. I had Avino, Santa Cruz Silver, and Discovery Silver. I went up between 10, 11, 12x, and it's possible to get, but when I was looking at it, I was thinking these valuations and these silver producers don't make any sense to me. And if the silver price does run, everything was priced at less than $1 in the ground. I just figured we could see a big run, but I wasn't trying to get a 10-bagger. And I'll also tell you this, I think people that say they're going to hold the whole way up and get a true 10-bagger are full of it. I think the reality is any sane person is going to start trimming it 3x, 4x, 5x. Why would you not take some money off the table? So I have never had a 10-bagger where I was holding the initial position at the end. By the time those got up there, I still have positions in all 3 of those stocks, Avino, Santa Cruz, and Discovery Silver, but much smaller. They're just worth a lot more because I took money off the table. So I think people that act like and maybe once in a while people get a true 10-bagger. I think who gets it is company executive teams, where they're forced to hold their own stocks. They're in it the whole time. They can't really exit in a good way. And if they get taken over, I think the company executives that have an outsized position in their own company are probably the biggest winners. That's why they do the best. But I don't think most retail investors do that.
I think that's a good point. It's a 10-bagger is more of a happy accident rather than a specific aim or purpose.
Right.
Okay, John.
Yeah. So I've never said 10-bagger or 5-bagger or 3-bagger in my entire life other than just now. Because
Let's get it started. 3-baggers with John Feneck.
No.
You spend half your life talking to someone that mentions that all the time.
Yes, my partner Don Durrett.
He starts at a 50-bagger.
I love Don, but
Thanks, Don.
I do talk to him off camera a lot about, hey, you were correct on Avino ASM going up 10-bagger, but then you just said it was going to be a 10-bagger from here. So, we always, we complement each other well. ASM, Avino was a 10-bagger for me last year. Guardian Metal, GMTLF, that was a 10-bagger for me last year. But like Shad said, you have to be selling. I sold Avino 3 or 4 times, on the way up. Like I didn't catch the top. Who cares? I made a lot of money, right? And like Lahontan Gold, a bunch of you guys know Kimberly. She's been at both of my conferences this week. That's LG, CXF, and LG in Canada. Don found that stock at 2 cents. I mean, unbelievable. So now at 27 cents, he's up huge, and he hasn't sold anything, And so to have that experience is unusual, I really don't believe in I see podcasts out there that call themselves like the 5-bagger or 10-bagger podcast. I'm like, so if I really audited your trades, how many of these have you had, right? Like seriously. So I think we're going to see a lot more of this, like where there's exponential growth in our sector as we move forward. Look at rare earths last year, for an example, right? Paul, you and I talked about this on your show. There were a lot of stocks up 1,000% before the November, what I call the China-US high five happened, and it drove the rare earth stuff down 30 to 50% across the board. Great opportunity to buy if you missed that first run, right? But am I going to be chasing stuff in that subsector? No. I'm going to wait for tax loss season or something like the war to be adding to positions like that on downturns like this.
Thank you. Well, let's sort of migrate that into selling, because that's obviously a key part in the investment process. You don't actually have any profits until you sell. And this is perhaps going to be unkind, but I'm going to reference Don Jarrett again. He's said he's going to hold everything until $5,000 gold or 6,000?
5,500 is where he starts.
Okay, but imagine when it gets there, the analysts are going to be calling for $7,000 gold, so we'll keep pushing that out. It's never going to be high enough for him. So the question is, what's your selling strategy? How can you avoid holding on too long and actually missing the gains you've made? John?
A lot of it is phone calls. I like fact-checking myself with CEOs all the time, because things change, management changes. The chart doesn't tell you everything, but like Shad, I look at technicals before anything, and then I look at fundamentals. So I use kind of a GARP approach like that. But basically the thing on selling for me is I never like to be disruptive to our sector. I don't sell anything all at once. So it's rare that I'll sell 100% of something in the same week because I know people follow me and I don't want to be disruptive, right? So I try to move out in thirds, but the reality is there's just like a year like last year we were up 153%, and we were up 360 in our private portfolio because we were selling on the way up. And I told people on your podcast, Paul, and 10 others that when silver crossed 100, it's an 18% position for me. I'm going to be selling some silver because I understand silver better than most people. I've been in the metal for 26 years, and this is an unusual rally, right? Does that mean I hate silver? No. My position went from 18% to 15% quarter over quarter. But I did take some off the table because I want investors to make money. That's the whole name of the game, like Erik said.
Well, that's it. You need to sell to have ammunition to invest in something else. Shad, your view there.
I'll piggyback just what if you said. If you want to have ammunition, a lot of times you have to sell something to buy something, unless you have unlimited money coming in from some other source. Maybe you're a crypto billionaire, but otherwise you have to rotate. I think a healthy thing to do in anybody's portfolio is to rebalance pretty regularly. So I look at stocks, and there's certain stocks that I will also, so I'm one part position trader where I'll hold for months or years, and I'm also one part trader, like I'll do a short-term swing trade for 2 weeks or a month. There are certain stocks I've literally bought and sold a dozen times, 24 times in a year. Uranium stocks were other ones went 10-bagger. I've been in energy fuels in and out of it, I think 80 or 90 times just in the last 5 years. And so I'm buying and selling all the time. Now, there's a tax ramification, so I do consider a first in, first out strategy. I'm not a tax advisor, full disclosure. But I do consider, when did I buy this, and am I in that first, higher tax bracket, or have I held long enough to get a lower? So I consider that, and I also buy in tranches and sell in tranches. So like John, by the time I've cycled through it, I'm usually selling a position that maybe I bought a year or two ago, and I'm way past that period, and I'm okay trimming it. And I think that if you're not selling, if you're just sitting there and hoping, you're watching all this volatility and missing the upside. My portfolio was up about 289% last year, and I would attribute about a third of that to trading, and the other parts of it just to the performance of the stocks collectively. It's 60 stocks, so it's hard to get them all going. But a lot of the upside I had was selling a stock I liked when it rallied and then buying it back. And you brought up the move to $100. When we were at the VRIC, silver got up to $117 that morning, the last day of the Vancouver Resource Investment Conference. And I was at the hotel room about to go downstairs. I thought, 117 silver? How greedy do you got to be? So I trimmed 6 positions in silver stocks right there. All producers, just trimmed them down, boom, boom, boom. Went over to the event, and by the time I got over there, silver was at 105. And it dropped that much. And by the end of that day, most stocks were red, even though the sector was at a fever pitch. And I thought, well, my goodness, thank goodness I sold. I didn't sell enough because obviously a couple days later, the bottom fell out. But I think you should be selling along the journey. It's okay to pull the profit and then redeploy it in something else.
Erik.
Yeah, I'm very bad at selling. I drink my own Kool-Aid, and I think that gold and silver is always going to go higher, and that's how it feels when it has gone higher, of course. But again, I sort that out by always being bullish when everyone else is bearish as well. And I mean, nowadays, since I manage portfolios for family members and friends, I mean, I can't be day trading 14 accounts, for example. So I focus on the longer term cases where, I mean, I think some of the portfolios I manage, I call them hodl portfolios. So I have cases where I'm pretty sure if I don't do a single trade over the next 3 years, they're going to be up. So I don't really need to worry about selling. And obviously the longer runway a company has, I mean, and especially if it's a good management team, because obviously the way to get any value or alpha from management is time held. Because I mean, if you give a good management team 1 second to run a company, they're going to run it as well as I do. Give them 10 years, there's going to be a huge difference, me running the company or the Landins running the company. So I tend to stick to those kind of cases, but I also just to take advantage of the volatility. I mean, I'm always fully invested, so I call volatility the poor man's dry powder, because I mean, you have these volatile days, and for whatever reason, one stock that you like is down 15%, and another stock you like is maybe down 5%. Maybe I'll trim some of the minus 5%, take some in the minus 15% at face value. Nothing's going to change with the portfolio, but maybe that's going to, that money might get an extra 20% over the next 2 years when I redeploy that. So, and it also keeps me sane, so, like thinking that I actually have dry powder, which I don't. But I always want to punish the market when it's doing something stupid.
Thank you, Erik.
Paul, may I interrupt? I think Erik Wetterling has a career in stand-up comedy. I'm just going to say that out loud. This guy is flying under the radar. Thank you.
Well, that'll give you some more dry powder to invest in things. The past 6 months have been very volatile in the metal space, and so the answer to my next question would have changed considerably if I'd have asked this in November, if I'd have asked this in January, if I'd have asked this in March, but here we are in May. Warren Buffett said we need to question every day if our money would get a better return elsewhere. You need to interrogate on a daily basis your portfolio. That being the case, and to draw this panel to a conclusion, what are some of the key stocks or opportunities you're looking at the moment? Erik?
Well, I have a weird portfolio myself, because like half my net worth is in a private company in silver, so I'm way overexposed already in silver. But I tend to, especially nowadays, I look at ones that, or I prefer the ones that have an advanced project, etc., close to production or maybe even in production, but I want them to have some more juice than that. So I mean, I have positions in like Gold Sky Resources, Swedish company. I have.
What a surprise!
Yeah. That's bias also. And I mean, Amex. There's other stories here. For example, I think Highlander Silver looks interesting because they have the up and coming production and just a huge deposit, and the people involved seem to be really good. You have Excelsior Resources who are here, who seems to have a base case of up and coming production, plus good exploration potential, plus spin-out potential, all that. So I'm leaning towards, I used to be all about exploration. Nowadays, when sunk costs are so high with inflation and all that, and permitting has been hard forever, so for the last 2-3 years, I would say I've been more focused on the second part of the Lassonde curve, and especially, I mean, at these gold and silver prices, that second part of the Lassonde curve has never been more valuable. I mean, the margins are probably like 14 times what they were 6 years ago. So you're making as much in a year nowadays as it took the same mine 6 years ago. It needed 14 years to put that margin in the bank. So those are the ones I tend to go for. And also preferably not, I don't do optionality plays. I don't do mature plays where it's like, oh, this works at only a high silver or gold price or whatever. That's not margin of safety. I've seen what happens in this sector when the tide runs out.
If you're interested in optionality plays in these metal prices, you've got to have a bit of a screw loose, because if you're looking at something that's only going to work at $150 silver, then wow. And to your point, Erik, the valuation jump for developers getting towards production is so big now that moving up the Lassonde curve makes a lot of sense. Shad, what are some of the sort of key names for you now?
Well, I just want to make the point that we finally got Erik looking at developers. Erik and I talk once a week on the KE report, and for years he was in All Explorers, and we were talking about first leg, second leg of the Lassonde curve and the developers. Glad to see you join the party, so I just want to say that publicly. But then also, I'm in the same boat. I really love the development stage, the second leg of the Lassonde curve, where maybe a company is at that boring orphan valley of death stage where they're doing the permitting, they're doing the studies, the investor base switches, the drill junkies have jumped out and the institutions are coming in. But during that changeover, there's some wacky valuations. So I often get in developers, and it doesn't matter the commodity. It could be copper, it could be silver, it could be uranium. I'm looking at all the companies that have a pathway to production, but I want it to be like, let's make it in the next 2 years or maybe 3 years max. If somebody's like, yeah, we got a pathway to production 7 years from now, it's like, okay, well then you're not anywhere close. So I want it to be a shorter window where they can hit this cycle in our lifetimes here. And then I also love growth-oriented producers. So in any category, whether it's uranium, silver, gold, copper, I want a small producer that can either bolt on mines, that can bring a large development project into fruition because their small one up front is the ATM machine helping build the company. So I love that. I love companies that are under the radar and people think, oh, that's just a small little producer. Yes, but if you listen to their plan on how they're becoming mid-tier producer. So I like the underdogs in the producer category, any commodity, and I like the developers that have a good pathway to production.
Well, Daenerys is a little bit in that vein, isn't it? It's got production now in Colombia, and it's going to use that to develop in Spain. And I think another aspect of that is development stage companies tend to have a relatively defined timeline to that value creation sort of hurdle getting up there, whether that's, the permit's going to take 1 year or 2 years to arrive, or it's going to take 2 years to build, so you can work on timing much more precisely.
I'll just make one more comment too. Last year, maybe the last year or two, some of the companies I like, I'll just throw out some company names. A company like Integra, where they bought the Florida Canyon mine, people thought, oh, it's an old, tired, old mine. Well, they're making a lot of money right now because of their margins got a lot fatter, but they're trying to develop their other two projects, so Delamar and the Nevada North. Something like Heliostar that bought two old, tired mines from Argonaut when they were carving it up. Alamos came in to get Magino, and that Florida Canyon mine also came from Argonaut, so it was kind of a raid on all the assets. But Heliostar got two old mines in Mexico. They're now producing. People thought, oh, they're going to run out of ore. But well, they keep exploring and finding more. They turn waste dumps into money, and those stocks really run. I'll give you one more. Discovery Silver was an optionality play on silver, but when they bought the Porcupine Complex from Newmont, the reason they went up like 14x is because they went from zero to hero overnight. And a lot of people thought, oh, well, how are they going to do? Pretty darn well, in my opinion. So I love companies, and a company we're both in, Magna Mining, did it with copper. They bought a copper mine in Sudbury. People thought, why would they do that? But they also have mine number 2, mine number 3, and mine number 4 already mapped out. And people are like, well, their production's pretty small. Well, people want copper. They at least are producing it, not just a dream and a drill plan. They actually are doing it. And they have 2, 3, and 4 more mines to bring on. So I love the small, growth-oriented producers. There's a couple names.
And let me just add to that, Highlander Silver, who has been at this event. They bought the Bear Creek.
Mercedes.
And for the Corani project, but it also came with a small mine in Mexico called Mercedes. They didn't want it. They were potentially thinking of spinning it out or selling it or getting rid of it. But because the metals prices have increased, that's now cash flow positive, and that's going to provide a chunk of the development capital for Corani. So things can change very quickly. Let's end this segment and this panel with some stock ideas from John Feneck.
Shad's looking at me because he knows I'm going to give all these symbols out because I...
Start throwing out names and see if he can do the ticker. He has a photographic memory of all tickers and their OTC tickers.
Thank you. So a couple of these names that were mentioned, Highlander, HSLV, sorry, is a new big name for us because of the acquisition. I interviewed Dan Earl and was really impressed with the vision for Corani. Karani was something we own through Bear Creek, and it's 300 million ounces of silver. It's a monster. I mean, it's just like unbelievable, I think, the upside there. And the fact that they are now over $5, I think that brings in a lot of buying in a bull market, right? Because my background is working with financial advisors. Financial advisors at Morgan Stanley, at Merrill Lynch, they have to have a $5 share price. They can't buy anything under that. So, you know, they're not going to look at a junior necessarily, but they're going to look at something like, they could look at a junior with a stock price of $5 or higher. They can't look at stocks that are underpriced that way. So I think in a rally, we tend to mix in companies that have the ability to attract big capital like that. You know, coming from that background, I think that's one of the things I'll just mention to companies here. That I see a lot of companies in the room. One of the things you should be thinking about is, how do I get in front of financial advisors in the US? It is an untapped market. It is absolutely huge. That's what I did for 25 years of my life. I coached advisors, I managed advisors, I worked with them. These guys, they're just, you know, a lot of them own GLD or SLV, right? They're just getting their feet wet in our sector. There's so much upside potential to get in front of these people, especially if they have discretion over their accounts. You know, come up to me and talk to me about it. I'll give you some more ideas. Continuing with silver, I mentioned Highlander Exelon is EXNRF in the States and EXN in Canada. I just talked to Sean on an extended call. They are going into production in Peru, and like the news releases have been excellent, and the stock really peaked out at 50 cents US. It hit it 2 or 3 times, and so that's your resistance level right now, but I think you break through that later this year when silver goes back over $100. It's trading, you know, low 30s right now in the US. What else? In silver, Aftermath Silver is our largest equity position in silver. That one is AAGFF in the States and AAG in Canada. Mike's a friend of mine. You know, I had him on my silver panel with Shad in DC a few days ago. I mean, when you look at the silver equivalent, it's 900 million ounces of silver at $100 silver. It's insane. You know, it's an insane amount of silver because they have manganese. It's 99.9% battery grade, and the market is totally missing that, and how accretive that is to the overall process. They could become a manganese, you know, producer in North America, like top 5, and the stock's trading at 50 cents US. It's ridiculous. What else? One more in silver, BlackRock Silver, BKRRF in the States and BRC in Canada. You know, Andrew, we just interviewed on my program, the Feneck Commodities Report. So Don Durrett, you know, was really impressed with that stock because they've just done everything they said they're going to do. They're on patented private land in Nevada. Unbelievable upside there. Their PEA that came out around March 31st was sort of overlooked because of the volatility, I think, that's been happening since March 2nd, but they're using very low base case metal prices, like ridiculously low. On gold, I see Kimberly just entered. I did mention you earlier, Kimberly. Lahontan Gold, LGCXF in the States and LG in Canada. Don and I just interviewed Kimberly a few weeks ago, and she was talking about her plans for the company, and it's an aggressive, you know, move. Like I think that she can pull off what she's talking about, which is possible acquisitions down the road, construction decision happening next year. It's, in my view, a definite yes coming out of that interview, and the construction timeline is only 4 to 6 months. So that's what was interesting to me was like, wow, a lot of these projects are 12, 15, 18 months. So we're going to see them get into production next year, and they're in Nevada with 2 million ounces of gold. You mentioned Denarius, Paul. That's become a favorite name for me over the last 6 months. DNRSF in the States, DMET in Canada, because I am a value investor, right? The stock hasn't been without its challenges over the last few months. They had a big warrant overhang they had to work through. That's done. They raised 18 to 19 million US on warrants. I mean, that's very, very positive. And they did a deal February 19th with the Saudis. For them to get a deal with the royal family in Saudi Arabia is insane. It's insane. It's because of Serafino. Serafino's been in mining 40 years. His best friends are people like Robert Friedland, Frank Giustra. He's connected, right? And that announcement was where the stock took off. If you look at the chart, you know, the stock took off on, oh, these guys are basically they were insinuating that they're gonna have all this money to throw at them. And then they put out a press release about a week or two ago saying that the Saudis are going to buy up to 10% of Denarius. So that got overlooked because we're in a bad market right now. But how cool is that? Like a junior that just has a group that's going to fund them. Like part of the problem with junior mining is money, right? Like raising money. And if you have a partner like this now, they formed an official JV. I think it's very interesting to look at. In critical minerals, Guardian Metal, GMTLF, has been one of my biggest holdings in tungsten. They're in Nevada as well. I really started to move heavily into the US last year when the Trump EO started in March of last year, and then he started to fast track a lot of mines. Also in Nevada, I see Spartan in the room, SPRMF in the States, W in Canada. That is a tungsten play in Nevada. They came out with really good news March 17th about an acquisition, and I think, again, the market kind of missed it. They were going through a raise around that time, so I think very highly of that. And I mentioned Western Star earlier, WSRIF in the States, WSR in Canada. I had dinner with the CEO last night, and we were talking about the selling of the stock this week, and it's just one large seller. I mean, they only had 20 million shares out pre-financing, so now it's low 40s. So maybe it's the fact that people are like betting against tungsten. You don't want to bet against tungsten. There's no production globally. It's just one of the best metals to invest in my opinion. So there's some names.
Excellent. Thank you, John. That draws us to a conclusion for this panel, so please join me in thanking John Feneck, Erik Wetterling, and Shad Marquitz.
Wanted to mention real quick while we have everyone on stage, Shad and I have known each other for 5 or 6 years and been good friends, and I think very highly of his work, so I invited him to do a webinar with me next month. It's going to be June 15th from 3:30 to 5 Pacific. It's the first one we've ever done together. We don't script anything. As you can kind of tell, we just have a lot of information in our head. But I don't know too many people who were up 289% last year. Shad is vigilant like I am at the computer. We're always thinking about how can we create alpha for our followers, right? And that's something that a lot of people don't think about. So if you liked what you heard today, I would really appreciate it if you look at our website, fenneckconsulting.com. And at the very top, you'll see something that says strategies for after the correction. That's what we named the webinar. And we're going to talk about all of this stuff and give you a lot of equity ideas and more details about how we look at the world. So thank you.
Excellent. Thank you, guys.